day, all. Ira Epstein of Linn Associates with your agriculture update for this Wednesday, the 28th of August, 2019. We're about 2:25 in the afternoon, so the grain markets have finished off. And remember, you're at that Labor Day period where it doesn't take a lot of volume to move the markets one way or the other, and that seems to be the case. We saw again today a strong energy day as the EIA numbers showed a net reduction that was very much in line with yesterday's whopping 14 million net draw of products and oil. So that worked out. We're still seeing a flow of lower interest rates. That hasn't changed. Inversion is still going on in the yield curve. The gold market has been everywhere. You got a $15 range, which is rather broad, and in silver, about a 45-cent range. And part of that is the thinness of the markets. I just did an interview with Wall Street Journal, Dow Jones, and they were asking me about the platinum market. So if you catch it in the news tomorrow or tonight, well, you'll know that it was me that was there talking to them. Dollar continues strong. It's still showing no signs compared to other economies. Even Mexico today came out with some slower growth numbers. But let's get back to the grains, because what we've been in is what we call a down thrust, and this is a weekly area chart of closes. And since 906 3/4, we've come down. For the week, we are up about 9.5 cents, so that is a bounce that we're getting. But that's about all that I could say about it. You know, the most recent low closes around the 845 level. Let's come back to this daily bar chart and take a look at the numbers that I have. Now, yesterday, this is what the chart looked like. And I said you might play around with this, but this area right here, but what we've got now is a period where the market seems to be making lower highs, lower lows, and not going anywhere all of a sudden. Now, you're going to get a reversal right here. Remember what this looks like against this number. And when we come over to the very next chart, the swing line, you have what's called an outside day. Now, I would have loved to have seen it get through 870.5 today. I'd have felt a lot better in saying, okay, this could be something important. What this could be, if the market does get over 870.5 now, is the end to this bear run, but I don't know that it's the beginning of a bull run. The way the pattern is setting up, you can negate the downtrend. You can't quite set up an uptrend yet. If you take a look at that 870.5, take a look at where the 18-day average is now, 872.25. So even if you take that out to negate, you've got some resistance here. Clear this other number back up here, and that could set you up for the 891 zone, and that would have to get all the way up to the 882 level if we take a look there. So could the market be saying, okay, maybe I've done enough damage to the downside? It could be. Have the bears lost some control today? Yes. Has the trend changed? Not yet. That's important. Where did the market bounce from? If you'll recall yesterday, I was saying maybe you go down to that combination of the line that we had. Let's see if I can get back to this chart. Right here, and I'm going to come back a day. We were talking about that. Would it get down there? Remember what it just did. Now we'll come back to these charts and get to the Bollinger Band. And the market did hit that today. Came about and had your reversal. So it's again hit a downside target. The market found some support at that downside target. Now the question is, can it get back up and fight a battle at the 18-day average or do something more? That will be the sign that we look for. But again, it's Labor Day. I don't know if people aren't just coming out of these markets. They don't want the position risk over the holiday period that begins in earnest, really starts today. I realize we have a full day of trading today. We'll be here on Friday, but I'm telling you how it works already. Now, when you take a look at this market, you can see while you hit the Bollinger Band, you're also oversold, and you have not turned momentum out of that. So you're oversold, hit a downside target. The trend is still down, but in this oversold condition, will people press the market? In the meal market, a little more interesting of a day. The market got down, came in through these lows, and now I've put that here. The high today was 340. See this down line? I'm going to leave that there. See this line? I'm going to move it tomorrow and have it pointing up. This market is out of its downtrend. It has not begun an uptrend. It's gotten lower and low and a higher high, and it's certainly respecting that 18-day average of closes. Let's assume that tonight and tomorrow people decide, hey, I want to cover more shorts, then the upper Bollinger Band comes in play. And the one thing that's striking to me is the market is developing that sideways action. Momentum has turned up. The bias today is still to the downside. You close 299.70, just under the 18-day average. So you have a market that I will call it out of the downtrend. I don't know that it could resume it or start an uptrend here. It's more sideways now. Soy oil, well, the market was up a little bit, but it's not showing the gain on the meal quite yet. Still in a downtrend. I don't know that you'll have the power to get down to these lows if you turn the meal and the soybeans out of their downtrends at this point. So if they get any rally here, this might come back up. I'd be looking then for resistance first, the 100-day average, then the 18. But I don't think the bears are going to do strong defense of those numbers because you're oversold. In the corn market, you have an outside day, key reversal day to the upside. You made the lowest low of this break, getting to 364.25, took out the previous day's high. In fact, you took out the two highs, took out the swing line. This was more of what I was hoping to see out of beans if you're going to get something. The problem, and there's always a problem on a chart, right? You still have your embedded reading, and on the hierarchy of chart formation, that's the most powerful signal. Lose that, get over the 20 level, and you're probably going to get a run to the 18-day average. It could all happen, in fact, at one time. If you saw any volume tomorrow on a light day like it's probably going to be. But that would be the resistance point, and that could drop a little bit, obviously, overnight. So watching that, but I think it's a signal. The bear part of that market ended for the time being. In the wheat market, we've had a pattern where the swing lines got the higher highs, higher lows. The market's refusing to settle over the 18-day average. It keeps the bias down, and you're correcting an oversold condition. I'll label that as neutral. In the sugar market, again, you probed the lower Bollinger Band, and you know what I say. First time you hit a Bollinger Band coming from a rally like we've just had is often a support zone. You went under it today to just sort of say, okay, I'll check you out, Ira. Got through that 1121, finished at 1137, oversold, resistance still at the 1154 zone. To negate the downtrend, you'd have to take out 1165. In the coffee market, battleground is crystal clear. It's the 18-day average of closes. The market today finished at 97.55, still under that 18-day average of 97.95. We ended the downtrend a while back this day, right here, when we took out this high, and you're just neutral. A close over the 18-day average could set up the potential for a challenge of the closest of the Bollinger Band or the combination of that and the 100-day average of closes. Right now, I don't see anyone in control of the market. In the cocoa market, we finished the day at 22.43. The 18-day average is 22.34. We've been hitting it over and over as this market's looking for direction. I'm going to call the market, because it closed over the 18-day, to have upside bias. You're not trending. You have a higher high and lower low pattern, and you've had a market that's corrected in oversold condition. Momentum is still pointing up with the bias, but you're not in an uptrend yet. To get into an uptrend, you got to take out today's high. Then the key is not to get back under today's low to get any chance of attacking the Bollinger Band. Here's the dilemma for the bulls. This Bollinger Band's falling rather sharply. Each day it's in the neighborhood of about 15 points or so. So let's assume tomorrow the market does even anything that's close to that. You're going to be in the 2300 zone, as that upper number is 2279. I don't know that you'll get the bulls that interested. In the cotton market, you finished today, and I should have this arrow as I'm looking at it pointing down. I got sloppy today, apparently. I want myself mentally, I'm on vacation too, but I'm actually here. You have the lower high, lower low pattern under the 18-day average, momentum pointing up, bias down, and you're stuck in a very narrow range here. Again, this is a market that's starting to act like one that has run out of downside momentum. In the cattle market, you're oversold. You have a pattern of higher lows, higher highs, but under the 18-day average. No trend of lasting power to it. Momentum is oversold. I don't know that the bears want to get involved or the bulls. In the feeder cattle market, you're still somewhat in a downtrend here with lower highs, lower lows. if you can not take out to actually today's low and tomorrow get a rally, you could end up with higher lows, lower highs, the beginning of nothing. And in the hog market, the hogs have hit that lower Bollinger Band and can't seem to get through it. I'm wondering if this area is a value area all of a sudden. I say that because momentum's turning up. So, close tomorrow over 64.40, which is actually that number should be 64.65. That's what it is. I'm reading the swing line high. 64.65, and that could be the beginning of something more important, maybe a rally back to the upper Bollinger Band. First time that I'd be saying, hey, this market is failing at the 18-day average. Has it failed yet? Absolutely not. I'll be writing about this in a much more crystal manner that you'll find clear tonight. I've already written most of my report because I already know I'm basically mentally going away right now. But when you get my free information, you're also going to get access to our mobile phone, and you can get our software that works on your computers as well. They're two different pieces completely. It doesn't matter if you have a smartphone that's an Apple or the Android type. This is what my reports look like, and I write them to be short. In other words, they're not a paragraph or two, don't get me wrong, but it's all about utilizing time smartly. But the real meat of what I'm doing are the trade recs, the commentary to prep you for tomorrow, obviously, and then the morning videos to tie them together, because it's in the morning video that I'm giving you the first look at the day, what the traders seem to be looking at, what the chart setups look like, and I do that between 5:30 and 6 in the morning. I'm recording it, so I get you going as the day goes. Then if you get my research, I'm updating that for you, if you will, by 11:30 in the morning, and then before 8 p.m. at night, that's all Central Time, I'm getting out another set of written recommendations. And if you like oral commentary, I typically put out 2 oral updates a day. They're short, about 3 minutes, but they're giving you what I think of the market along with trade recs. How do you get this for a free trial? Call my staff or go to our website. You see it right here. And on the website, you'll see free trials. You can click up here if you're watching me on YouTube. It'll take you there as well. Sorry about the sloppiness today, but I'm on vacation. You have a good day.